Right, let's get this over with. Welcome to the May 20th, 2026 market briefing. I've got the numbers from MP Partners Research here, so the data is solid. You've read the standard disclaimer. Your money, your responsibility. Now pay attention. We are looking at the Korean capital markets today. If you're a retail investor trying to make sense of the absolute rubbish the institutional funds are pulling, you're in the right place. Let's look at the absolute carnage. The KOSPI closed at 7,271 points, shedding 3.25%. The foreign funds are having a proper meltdown, dumping 6.83 trillion won from the KOSPI just yesterday. That's 9 consecutive days of selling, totaling a staggering 42 trillion won. Meanwhile, the U.S. 30-year Treasury yield has spiked to 5.197%, the highest level we've seen since 2007. WTI crude is sitting at $107.8, up 81.4% this year due to the Iran war risk premium. It's a bloody minefield. What we're dealing with here is a textbook macro overload. The 10-year yield is at 4.67%, crude is at $107.8, the dollar index is at 99.31, and the won has been battered to 1,507 against the dollar. This three-chain stress test of rates, oil, and FX is firing all at once, the first time we've seen this simultaneous elevation since mid-2024. The algorithmic trading models the institutional suits use are just blindly hitting the sell button. It's utterly mindless. Put this in perspective. The S&P 500 only dropped 0.67%, yet the KOSPI tumbled 3.25%. The Korean market took a hit nearly 5 times harder than the US. Why? Because when the won breaks 1,500, those unhedged foreign funds automatically unwind their positions. This isn't a fundamental flaw with Korean equities. It's a structural amplification caused by mechanical capital flight. The intraday action was just as grim. We opened down 1.20% with immediate sell pressure and hit a trough of minus 4.98% around 10:30 in the morning. Samsung Electronics dropped 1.96%, and SK Hynix fell 5.16% as foreigners dumped 2 trillion won. However, Hanwha Aerospace actually climbed 4.80% on the back of the Iran defense premium. It shows you just how twitchy the market is right now. Now, let's look at the capital flows. In April, these foreign investors were buying an average of 50 billion won a day. Fast forward to May, and they're bidding 3.2 trillion won a day. That is a 6,400% swing compared to April. Statistically, we're looking at a z-score of plus 3.1 sigma. When the rubber band is stretched this far, historical data shows a 68% probability of mean reversion within 10 to 15 trading days. Let's break down the 3 vectors of this mess. First, U.S. rates. The 10-year is at 4.67%, up 7.9 basis points. Every 50 basis point rise pushes the equity risk premium up by roughly 60 basis points. Second, crude oil. WTI is at $107.8 a barrel. Every $10 increase adds about $2.5 billion a month to Korea's energy import bill. Third, the strong dollar. The won is at 1,507, nearing a 3-year low. It's brilliant for export revenues in won terms, but it triggers MSCI emerging market hedging flows. So what's next? Tomorrow, we've got the FOMC minutes and Nvidia's Q1 earnings. If Nvidia's revenue guidance tops $37 billion, the AI semiconductor demand thesis gets a massive shot in the arm. Then there's Jensen Huang's Compute 2026 keynote on June 1st. Last year, a similar event drove the Korean AI supply chain up 12% in just 2 weeks. Keep your eyes peeled for that. Where should you park your quid? Overweight on defense and aerospace, and HBM semiconductors, Hanwha Aerospace, and SK Hynix. The Philadelphia Semiconductor Index held flat against the rate surge for a reason. Conversely, keep well away from the automotive sector for now. Hyundai fell 8%. Their union is demanding a 30% profit share and veto rights on AI robots. Let the institutional lads sort out that headache. The doom-mongers are selling fear, but I look at the facts. Meta is building a $200 billion data center in Louisiana with a 1 million GPU cluster. Google and Blackstone are dropping $5 billion into TPU-based capacity. All those GPUs require HBM memory. And who controls about 50% of the global HBM market? SK Hynix. Korea is holding the best cards in this long-term AI infrastructure supercycle. Right, the action plan. The base scenario, with a 45% probability, sees the KOSPI stabilizing in the 7,300 to 7,400 range. Don't go all in like a punter at the races. Scale in. Buy in 1/3 increments tied to these catalysts. Put a hard stop at KOSPI 7,100. Keep your maximum portfolio exposure at 40% or less until this macro rubbish is resolved. The KOSPI is trading at a price-to-book of 2.22 and a PE of 7.25. It's criminally cheap. Don't let a bunch of spreadsheets in New York scare you off a perfectly sound trade. Do as you please with this, but don't come crying to me if you bottle it. I'm off for a pint.